this video, I explain modified cash basis of accounting. So in my other video, if you'll click above, you can see it. It deals with cash basis of accounting. In this video, we're talking about how to modify that cash basis of accounting. Now, one of the questions that comes up is, when can I modify the cash basis of accounting? In this video, I'm going to give you examples of where you might be able to do that, and I'm going to give you examples of where you probably don't want to do that. So first, let's talk about when you can modify the cash basis of accounting. Think about a transaction that involves the use of cash, such as purchase of capital assets. Sometimes we call that plant, property, and equipment. So if you buy assets, let's say you spend $100,000, so you write a check for that amount. So the journal entry is a credit to cash and a debit to either capital assets in a government or plant, property, and equipment in a commercial entity. So that transaction involves cash. So since it does involve cash, then you could modify the cash basis for that transaction. So what does that mean? Well, that simply means that you can record that capital asset or plant, property, and equipment on the balance sheet in a cash basis statement. On the balance sheet, there's only two accounts, cash and equity. But when we're doing modified cash basis, now we're adding some additional accounts to the balance sheet, such as plant, property, and equipment. So if you modify the cash basis for this type of transaction on the balance sheet, you're going to see plant, property, and equipment. Generally, you'll also see depreciation of those assets. So once you record those capital assets, you can depreciate them. Here's another example of where you might modify that cash basis. So if your entity loans $20,000 to an outside party, that transaction involves cash. You're writing a check for that amount. So you could debit notes receivable and credit cash using the modified cash basis. What about the purchase of investments? So if your company is using the modified cash basis and it spends $75,000 on equities, so it's buying some stocks in the stock market, it spends $75,000. Well, that's a cash outflow. So we've got another eligible transaction to use the modified cash basis. So the journal entry here is a credit cash, a debit to investments. So now we've got investments and, say, plant, property, and equipment and cash on the balance sheet using these examples we've just described. We've been talking about the asset side of the balance sheet. What about on the liability side? If we borrow $150,000, well, we're receiving cash. Since that is a cash transaction, we can now record notes payable on the balance sheet. So the entry would be a debit to cash and a credit to notes payable, since the transaction involves cash. So now we've got, what do we have on the balance sheet? Well, using these examples, we now have cash, we have a note receivable, we have investments, and we have a note payable. So when you look at a transaction and cash is going in or out, then more than likely you can modify the cash basis of accounting and record that transaction on the balance sheet. But what about transactions that don't involve cash? So let's say that you buy $10,000 of supplies, you get an invoice, there's no cash involved in that entry. So we normally would not accrue payables. Also, we normally would not accrue customer receivables. So when you provide services to a client, let's say you provide $30,000 of services, you send a bill out. Well, under modified cash, you normally would not accrue that receivable on the modified cash basis of accounting. And why? Because there's no cash involved in that initial transaction, so you're waiting to receive cash to recognize that revenue. Now, one thing I want to point out about the modified cash basis of accounting is there's no technical professional body that issues standards in regard to the modified cash basis of accounting. You know, for GAAP, for generally accepted accounting principles, those are issued by the Financial Accounting Standards Board. So you have an official body that issues those standards. The modified cash basis of accounting has some leeway in it, and there's really not a professional body that gives you the parameters for this type of accounting. It's really a basis of accounting that's kind of evolved through practice over time. The same is also true of the cash basis of accounting. There's not a technical body that tells you what cash basis is. We just know that the cash basis involves cash transactions. The modified cash basis, we're modifying cash basis. It's just a way to do accounting that has evolved over time. So as we modify the cash basis for transactions such as loans to or from the business, or where the business is buying investments, or where the business is buying plant, property, and equipment, those are modifications to the cash basis of accounting. But I say it again, there's no technical body like FASB that tells us how to do cash basis and modified cash basis accounting. One of the drawbacks to modified cash basis and cash basis is some banks really will not accept these types of accounting. They may require generally accepted accounting principles. So before you create financial statements, make sure your lender, if you have a loan to the business, make sure there's not a loan agreement that requires GAAP, because if there is, you're going to have to use that full accrual GAAP basis accounting for that entity. So I hope this helps, and until I see you again, take care, and bye now.